Ladies and gentlemen, welcome to the late night Thursday show. After you've had some turkey dinner, Steve was able to join us just in the last couple minutes or so. Just got probably back from Thanksgiving, I assume. Some festivities.
This is correct. Full of turkey, full of pie,
Nice.
full of milk, full of coffee. You know, it's good stuff.
Yeah. What's your favorite? What's your favorite part? Are you a cranberry guy?
I'm actually not. That's a little weird, but no, I'm actually not.
Not everyone is. It's probably the most divisive part of Thanksgiving, I would say.
Yeah, I would agree with that.
Yeah.
So before we get into all that, let's just say that. Please keep in mind, Tannor and I are not, well, I'll say this myself because of what Tannor said last time. I am not an investment professional. I'm not registered by anybody. I do not know your situation. Please take a moment and read this disclaimer. Take everything that I say and Tannor says with a grain of salt. We do not know your situation. We just are two guys that do a ridiculous amount of research, and this is for entertainment and research purposes only. Thank you very much for reading this statement. So Thanksgiving, I'm a big dessert guy, as you know. And dessert was amazing because there is a place that makes absolutely ridiculous pies. And if I sent you a picture of the pie, you'd be like, holy shit. It's unbelievable. Love dessert.
One pie or a couple pies?
Well, no, we had a lot of stuff. I mean, we stopped at the bakery on the way. We got pastries, cookies, breads, and then there was pies, there was cake. I mean, you name it, it was there. Ready Whip, ice cream, blah, blah, blah. So
that's awesome. Yeah. It's funny because I'm in Canada. We had Thanksgiving about a month ago. So, I had just a regular meal today. But
you could have got fancy and did a mini Thanksgiving.
Yeah, I should have celebrated a little bit. It was, a little bit of a day off for me considering the markets were closed. So I should have celebrated alongside you guys. But no, just day to me and my girlfriend. And yeah, it was nice.
Good. Glad you guys had fun. Good stuff.
Thank you. All right.
Go Chris Patel style right now with the backwards hat.
Do you drink gravy or milk on Thanksgiving?
Both. Well, smother the turkey in gravy, smother the sweet potato in gravy,
You didn't actually have any milk on Thanksgiving, though.
What do you mean?
You're pouring yourself a glass of milk?
Tannor, I'm the milkman.
I'm aware, but let's be honest. You did not pour yourself a glass. They're going around, who wants wine, who wants this? And you said,
No, listen, I'm the driver. I don't drink. I'm the driver. Okay.
Got you. I heard your little thing about your dislike for ride sharing and Ubers and stuff. So I guess.
Yeah. Why am I taking an Uber? I'm not getting in an Uber. I'm not letting somebody drive me around. Not interested.
So you can enjoy a drink if that's what you're into.
No.
All right.
No.
I get you.
No.
But I heard you actually had something interesting on the investment side. We can transition away. Do you want to go right into that stock that we were talking about?
Yes, set it up, man.
Well, I'm not exactly sure what you're here to say, but Steve said that he had some very interesting things to say about Hood stock, Robinhood.
Yeah, so as you know, went to dinner with Amit and some people last night.
Thank you, Ray. Really appreciate that.
Ray, that was so nice of you. Thank you for supporting Tannor. So, as you know, Amit and I went out to dinner with some people last night. Not going to say who they were. Fabulous people. Had a blast.
I'm pretty sure it's very common knowledge who you went out. I think you said it live a couple times.
Listen, I don't know what was said live and what wasn't, so I'm not going to say anything about who was there. I will say that after talking with the people there and talking to the two children that were there quite extensively, I realized I've made a very big mistake. in how I look at Hood and even how I look at SoFi. And one of the gentlemen we were with, his children, and I got to tell you, it made me so happy talking to his children that they are investing at the ages that they are. It really made me so happy for that. And their enthusiasm about it. And the fact that they use Hood and they could never see themselves using something else made me really realize that Hood is going to grab the younger generation, like, completely. And I know that's always been a thesis, and we've said it about both Hood and SoFi. I don't think it registered because I don't talk to many young people, especially people that are still in high school. You know what I mean?
Yeah.
So I think it just hit me differently last night. And I really do believe that they're going to grab such market share over the next 5 to 10 years, and maybe even over the next 20, because I can see an environment where a transition of wealth leaves traditional banking platforms and goes into Hood and SoFi. So I think both are going to be winners. I just think at this point, Hood may be a bigger winner than SoFi in a long time.
I mean, I think the crowd that you are around is also extremely favorable towards Robinhood over SoFi. But yeah, they're both doing great. Robinhood, like, I'm glad you're starting to see it because, you know, there's such few people, especially whenever money gets passed down from generation to generation, that are going to stay with these expensive financial advisors. And like that's what passive investing solved. The ETF solved the problem of, you know, these expensive financial advisors that you're paying ridiculous rates to just tell you to stay calm and don't sell. Now, people are more and more transitioning over to, you know, YouTube or something like this to listen to commentary on the markets and say, hey, you know what? Maybe the sky isn't falling and I just need to stick with the program, and that there is a long-term history of the stock market of even during the darkest days, things do recover, and they recover higher than where they were, you know, at all-time highs before. So
I got a different theory.
Go ahead.
My theory is barriers to entry. So, and I never really looked at it like this, but barriers to entry, I would say, really does exclude JP Morgan Chase and Morgan Stanley from becoming a first brokerage account. And I would think that out of Schwab, Fidelity, SoFi, and Hood, more people are going to open up a Robinhood account than a Schwab or Fidelity account going forward.
But why is that?
I think, one, they've built a better mousetrap for novice and also people who want a streamlined approach. Look, I started using Hood for crypto just because of how much cheaper it was than other platforms. And it is so easy to utilize their product. I mean, they make it so easy. It's basically frictionless. So I think that when you look at the younger generation and what they're offering, and if they get on a really good marketing and advertising campaign about all the benefits of Robinhood Gold, that is something Fidelity and Schwab just does not have, from the credit card to everything else. And I just think that they have built a better ecosystem. Now, somebody may want to open up a Fidelity or Schwab account just because they're in those ETFs and maybe it's more brand recognition. And I could completely understand that. I think there's a place for all of them. I just think that Robinhood is going to experience an S curve in growth. And I don't even think that it's started yet. I think the next 5 to 10 years is going to be, and this is coming from somebody who, I was never a Robinhood fan, ever. You know what I mean? Like, after talking to some people last night, I'm actually considering moving stuff there. I never thought I'd say that before. I never thought I would say that before.
What's crazy is the people that you went to dinner with have a ton of capital, and they are wanting to move their assets to Robinhood. You know, it's just incredible. But I share that same sentiment with you. I don't know if I'm as bullish on the S curve hasn't started yet. The way that I would look at it is just very numerical in a way. I think Schwab has 38 million active users. Robinhood has 27 million.
Think about it like this. Over the next 10 years, do you think Robinhood is going to have way more customers than they do today?
Yes.
Okay. So if you're thinking 10 years out, the S curve hasn't really started yet. Just think about how many more customers they'll have in 5 years and then on the 10-year mark. Right now, even though it feels like the S curve has started, if we wait 10 years and look back, this will actually be the beginning of the S curve.
Yeah, but they're like actively doubling. They grew at 99.9% year-over-year revenue growth. I hope that years like that continue, but that is going to have to slow down. I mean, like, it's hard for companies to compound at that rate.
But they don't.
Palantir and NVIDIA aren't continuing that.
Even if they compound 50 or 60%, think about it. Their assets under management will skyrocket because you got to think over the next 10 years, the market will at least triple. Because you got to think that, okay, at this rate, if we don't have anything crazy in the unforeseen future, over the next 5 years, you should get a double. And then over the next 5 years after that, you should get another double. So assets under management will expand. And as they grow customers.
Hold on a sec. That's a little accelerated from the norm, though, right?
I mean, over the past 5 years, it's doubled right now.
Yeah. But these are good years. I think the average, if you expand it out, it's closer to about 7. Yeah.
Closer to 7. But I think that we're going to see a robust expansion in earnings potential because of robotics and AI. And I do think that we're going to be able to keep up these growth rates with the market. And I think that, look, always going back on a 50 or 100-year chart, it's much harder to change that data. And maybe 11.5% or 10.8%, whatever metric you want to use, maybe that can get up to 11.5 or 12, depending on which metric it is. But if you look at the past 10 years, I think we're more likely to see an average growth rate of 15 to 18% in this type of economy and this type of earnings potential scenario, especially if tech continues to lead the market higher. And if that happens, which there's no reason it can't happen, their assets under management should at least double, if not triple. And I think, and that's just with what the market does. That's not even with new stuff coming on. And then you start thinking about the older generation passing away, leaving their assets to the younger generation. Where those assets going to end up? Are they going to stay on the platforms or are they going to get transferred? You know what I mean? Like, there's a big wealth transfer that will happen, the largest wealth transfer in history over the next 10 to 20 years. And I think that we're going to see a lot of capital moving around. I also think that these companies are going to have a very hard time competing with Hood because of what Hood is offering to move assets. And I do know that companies have said, no, we will not match, and people have moved stuff. So, I mean, I think that's going to just become more and more, because think about it. If you get left $1 million in stocks and a company is willing to pay you 2% to move them, and then the brokerage firm you're with is not going to pay you anything to keep them to match, then you're getting 20 grand for free just to move your assets and keep them there for whatever the 3 or 5 year term is. So I do think Hood's going to see a big expansion. And I think I have to say I was wrong on Hood. I thought it was a platform that I didn't understand why people would use it over other platforms. And look, I was wrong, 100%.
You know what I've learned, Steve? Every stock that you buy might not fit into my portfolio. You're a much more diversified investor than me. Okay, you're into dividends, you're into REITs, you're into safety and ETFs and defensive plays, and you're an all-around great investor. And that's literally proven from your track record on seeking alpha that you can literally follow. You're one of the top guys. But every name that I say does fit in your portfolio. It's a one-way street. And I told you multiple times that you were going to get into Robinhood. And you said, no, no, no. I said, it's going to happen. I said that, I think, like as most recently as this month.
You say it at least twice a month to me. Now, I will push back that not every company that you mentioned would fit in my portfolio. Hood definitely could.
All of them. All of them. I'm telling you, you like my investing style. It doesn't mean that I'm right. That's not what I'm suggesting. But you and I think a lot alike whenever it comes to growth investing.
Yeah, we do.
And it might be Hood today. It'll be Shift 4 tomorrow. I'm going to get you.
You're not going to get me on Shift 4.
Dude, you said this about Block. You said this about NVIDIA. You said this about Hood. I'm going to get you on all of them.
Well, listen, I changed my opinion on NVIDIA because the numbers and the math changed. I'm changing my opinion on Hood because I have to take a step back and admit that I was wrong after everything I'm saying. Now the question becomes,
to do that
for me with Hood, there were some numbers thrown around last night about where people think it goes. I have a very hard time with the numbers that were thrown around with where it goes.
The $1 trillion number that Amit likes to talk about?
Let's just say that $1 trillion number was thrown around last night, and it's very hard for me to see Hood getting to $1 trillion with a market cap of 115 billion when I think that from a valuation standpoint, it's rich to be nice, but it's hard for me to understand how Hood's going to become bigger than JP Morgan Chase when they are at 837 billion right now. Like, they've never been $1 trillion company. So can Hood get bigger? Absolutely. Can the market cap expand? Absolutely. Are we going to see a 9.5x from here? I have no freaking clue.
Yeah.
I hope it does. Look, for everybody that's in Hood, I hope it does. Absolutely hope it does. But I think that it's starting to get, you look, what's Bank of America's? Like, Bank of America is not a small freaking company, and I get the growth, but they're a $386 billion company, and they're generating $140 billion in total interest income, 59 billion in net interest income on revenues of 100 billion. So I think Hood's got a lot of things that they got to do, but I think that they're going to siphon off of these companies a great deal. And, if there's an entry point that makes sense, I would probably start.
I'm not, one, I think financial services will boom. I think JP Morgan will pass the $1 trillion mark. So the idea that like financial services won't have any names in that, range, I don't think will be true in a very short period of time. Like JP Morgan will get there soon. But Robinhood has a long way to go, but the great wealth transfer is such a benefit for them. Unlike what you're seeing at Bank of America or JP Morgan, Wells Fargo, Citigroup, Schwab, all of these names. Like, they are just old guards, and they're not capturing the younger audience. In fact, can I show you a video really quick?
What platform is it from?
YouTube. It's my own video.
Are we going to get flagged for this?
No, it's my video.
I understand that, but I want to make sure we're not demonetized or flagged or anything.
I will not demonetize you.
All right. I don't want to
my produced content.
I'm not looking to get in trouble with the YouTube people, okay?
Okay. I had a conversation with Vlad Tannor back in August of 2024 or something. So who knows how this has changed, but if I were to make a bet that it has only gone further in their favor. But take a listen to what Vlad had said and enjoy this little short that I had made. Recently, you were on a podcast. You said there's more millennials on your platform than Schwab, Fidelity, E-Trade, Vanguard, all combined.
That's right. Yeah.
I saw another article that recently said that millennials will be the richest generation in history. How does Robinhood benefit from this great wealth transfer, and sort of explain the timeline of how this happens? Because it might already be starting.
Yeah, I think it's starting. I think that, I mean, if we become the place where millennials hold all of their assets and wealth, that's tens of trillions of assets right there. 75 plus trillion of wealth is going to move from baby boomers down to Gen X and Gen Y and beyond in the next few decades.
I mean, come on now.
Yeah, I get it. I get it.
They have more millennial and Gen Z accounts than Schwab, Fidelity, E-Trade, like all the big companies all put together. Like, they have captured the audience of the young people. By the way, someone said Tannor talked to Vlad. WTF? No, it was just AI. All that was fake. No, I'm kidding. We did an interview a while ago. But I just think, like, time is on their side. And whenever you have those companies, like whenever I'm investing in PayPal or something, there is like almost time decay. You're giving the faster moving competitors like Stripe more time to capture more market share away from a company, even though it's cheap. But Robinhood is the opposite. Let's say people don't recognize the value of Robinhood in the short term. There's still market share expansion happening, and there's more products that come out. They expand their total addressable markets. They enter new verticals like prediction markets and banking and credit cards. They just entered crypto institutional buy, sell, and hold. When are they going to start entering into those types of markets for equity trading, options, futures markets for institutional traders? Like, there is such a massive market here that they have essentially 0% market share in, not even touched yet, not even tried to yet. That seems pretty exciting to me.
I think there's a lot of things exciting about Hood. I think that it's going to be interesting to see what they do, because they have just deployed so many products and they have really built a great ecosystem. And I think prediction markets are going to be the future of sports betting to a degree. And the reason I say that is because while there's a lot of things that you can't do with it, and while somebody can make the argument that you can follow the lines, it is completely different than following how the contracts are moving in real time. And with the UFC partnering with, it's Kalshi that they're partnering with, correct? Or is
maybe
it
I thought it was Polymarket.
Yeah, it's Polymarket. It's one of the two. But then, regardless, them partnering with Polymarket, and it's going to be integrated in the jumbotrons for a live scoreboard about who's winning, and you're going to see where the contracts are moving. I think we're going to see that with every big.
Oops, sorry, I didn't mean to, but yeah.
So I think we'll see that with the NFL. I think we'll see with the NBA, MLB, NHL. I think we're going to see it across the board in the next 5 years. And I think that this is very bad for DraftKings. And Robinhood is going to completely shock people in how much they make from those contracts. And I think it's going to be a huge revenue generator from them.
Yeah, so let's get down to the nitty-gritty. When are you starting a position?
I don't know. Look, when I look at Interactive Brokers versus Hood looks very expensive. But do I think Interactive Brokers has the growth S-curve that Hood is going to have? No, I don't. So I have to give Hood a bigger multiple off of that and not discount it as much. I have to rework some numbers, and I may even have to say, you know what? Maybe where is Hood right now? Let me say
126 or something like that.
So yeah, 115 market cap is very high.
128.
But this is something where, look, this doesn't have to go below 100. This could bounce around between 100 and 150 until it grows into the multiple before the next big leg up. I want to see what happens, because it looks like ever since it crossed 100, it doesn't want to really break through that 150 mark. Now, I am not a TA specialist, and I really need somebody to teach me TA so I can ask them very specific questions. I understand how to read charts, and I know quite a bit about this stuff, but I'm not an expert by any means. I'm not seeing a way for the current chart to get through the top line resistance. And I would probably say if it falls under 115, I could be persuaded to start a position and average my way down if it falls, or even average my way up if I can make a thesis where I think that this can get to a 200 billion market cap over the next 2 years. Because look, if they can get to a 200 billion market cap, that's a 75% return.
Yeah. Yeah. Really quick, can we pivot? I don't know your stance on a lot of these Chinese tech names. Whenever you look at them from a value perspective, looking at them like they were American companies, they are extremely cheap.
There's only one I care about, and I don't even care about it anymore.
I'm not sure I could get. I'm going to assume it's either Alibaba or Tencent, but I don't know which one you would prefer.
Alibaba.
Okay.
So I could have cared about Tencent because they own League of Legends, but because of the stringent rules on that type of stuff in China, I just can't get excited about it. Baba is something that, and I've written a bunch of articles on Baba. I know a lot about Baba. I am no longer a shareholder. I've exited out of all my accounts. I started buying it around 210 or 220.
You're good. Just 1 second.
Sure. So I started buying it around 210 or 220, and I bought it all the way down to, I believe, $80 or so. Let me just look at a chart, make sure I'm not giving a bad number. How low did it at? Yeah, I bought because it got to around 70. I got my lowest tranche in the low 80s, I believe, and I got my cost per share down to like 115 or so, I think, that area, and I exited around 170, 175. Now, it took me a while, and I bought my way out of a hole because the numbers looked amazing. And what I had said in my articles about Alibaba was I called the brokerage I'm with, and I asked what happens if they get delisted from the market. What actually happens to my money and what happens to my shares?
Yeah.
Now, I am not going to say what happens, or what I would say is if you're interested in Baba because it's an IDR, you need to call what I would suggest ADR. My friendly advice would be call the brokerage you use and ask them what would happen to your shares if it gets delisted. And then based off of that, ask yourself if you're okay with that outcome. So for me, I was okay with what happened because my money was not lost. I would just have to go about liquidating my position in a different way. I would get shares on a different exchange, and I was okay with it. I also didn't think, even though the height of it, I didn't think they were getting delisted from the exchange. So I was a lot less worried than other people about it. And at the time, I mean, it was trading at a single-digit price to free cash flow when I was acquiring shares. And I bought my way out of a hole. And I said, look, this is going to turn at some point because China has one of the largest populations. They're catching up in tech, and their business landscape is going to grow with cloud. And Baba's got their tentacles in everything. And I think people underestimated how big their cloud is the biggest overseas. So that was one of my reasons for really feeling okay about, you know what, this isn't something I'm going to sell and take a tax loss on. This is something we're just going to buy our way out of it, because I didn't think it was, look, at $80 a share and $70 a share, it was trading, and I can go back to an article and get you the exact numbers, but they had so much cash on hand compared to the market cap. I mean, I'm looking at the balance sheet right now. They still have, at the time, they had around 75 to 80 billion in cash on hand with another 60 billion in long-term investments. You were getting, I think, 60 or 70% of the market cap was just cash with very minimal debt. So the setup made sense.
The the reason why I bring that up, did you see the Pentagon news about some of these companies?
Yeah.
Alibaba, Baidu, BYD,
Mhm.
that they are going to be added to a list that could, or that are essentially being seen as aiding Chinese military.
Yeah, I look, I'm not in it anymore, and the political environment has shifted from when I was buying.
Mhm.
Now, the political environment wasn't good when I was buying, but I feel like it may be a little worse right now. But I also don't know if what they say is actually going to happen, because then you got to think that trade talks are going to get screwed. So I think you got to take that with a grain of salt. All I can tell you is that at this point, I had made a decision to get out of individual companies, and my only exposure to Chinese companies right now is through a emerging market ETF that I'm in from State Street, just because I want some exposure to emerging markets, and China is one of the areas in this ETF. Other than that, I'm not playing any of those names.
Yeah. Okay. Yeah. No, I think that they're uninvestable for me. Honestly, there is some stuff outside of the United States that I do like, but I've just found myself liking LATAM over and over and over. Latin America.
I know you
And
do.
then, sorry.
I know you do.
Yeah. And like, I like Mercado Libre. I like D-Local. I like Nubank. Nubank's actually like in my top 5 holdings. Like it's a very core position for me. And so, yeah, I really like that space. There's a couple of really interesting companies in the Netherlands. I find that very interesting as well, but not so much anywhere else. Or I mean, obviously, there's some Southeast Asia plays that I think could definitely be investable, but I'm not in them right now. But China, absolute no-go for me currently. I don't know about you if you're playing any other regions. India looks super interesting. Obviously, it's hard to ignore the just overall explosive population and GDP growth, but I still haven't found anything that I actually like there in terms of public stock investing.
No, I mean, the only thing that I can say is Canada, which technically is another region, although you can consider it North America, only because I'm an Enbridge shareholder and a Bank of Nova Scotia shareholder
Bank of Nova Scotia.
for the dividend.
Yeah, Scotiabank.
But I'm a big fan of Enbridge. Very
Yeah.
big fan of Enbridge.
Uh,
Other than that, no, I'm not. Well, so I guess you could say Europe a little bit, only because BP is technically a European company. And I also have exposure through an ETF over there, which I'm actually considering getting out of.
the honestly, the only name that I obviously Enbridge and there's a lot of those companies that I actually find really good dividend stocks. Canada has a lot of great dividend stocks. But for growth investing, there's one name, and that's Shopify, and it's a core holding for me as well.
Yeah, great company.
Yeah.
Great company.
Okay. That being said, NVIDIA.
Yeah.
NVIDIA is, I think it's been a while since we last spoke. So it's sold off after earnings. I think the last time we spoke was actually just right after earnings, wasn't it?
No, you came on and you and Chris talked about TPUs versus.
Right.
Well, people thought I was sleeping. I was listening to the two of you. I had also gotten a flu shot at 9:30 in the morning, and it was starting to hit me. So
You
I was
were
like,
in low battery mode. I could tell you were.
I was like, oh, this is perfect. Tanner's going to come on and talk to Chris, and I feel like crap right now. So I can just take a beat and just listen to them talk. This is great. And it was a great discussion between the two of you. And I am shocked at what's going on with NVIDIA. I am shocked about what is going on in the Twitterverse, because saying the Xverse doesn't really have a good ring. I think saying the Twitterverse comes off the tongue better. I am shocked about a lot of things. And this whole depreciation of chips is annoying the hell out of me, because I spoke to a CPA about it, and the CPA was like, yeah, this is stupid. They're following GAAP freaking standards. And until they change GAAP standards, they're not doing anything wrong. And who is Burry to say that they should be depreciating on a 2 to 3 year schedule when there are specific GAAP accounting rules for this exact thing?
I mean, I don't necessarily trust GAAP like that. I think that's why we have adjusted numbers for a reason, is because there are some loopholes. And I'll be honest with you, if there is a loophole, it is in depreciation on those chips. I just think it is not inappropriate. Like, I don't think we're seeing anything egregious here. But
Well, I can read you what he wrote if you want me to paraphrase it tonight. If you want me to paraphrase
I mean,
it.
it's like, I don't know who this guy is, but
No,
just because you call him a CPA, like there's a lot of CPAs
no,
in the world. It doesn't make him
no.
smart.
All right, so he doesn't do taxes. All I'm gonna say is I don't want to exactly say who he is. I can tell you that he worked for big four firms and he was an auditor for them, and he's a CPA. Like, he's trustworthy, super smart.
All right.
All right. So basically, and I'm not going to read word for word, I'm going to paraphrase, but what he said to me is, I will read this first part word for word. It's hilarious. I think Burry is just a moron when it comes to his argument surrounding depreciation. That was the first sentence. And then he goes into his whole thing is that he wants the asset to be depreciated on an accelerated basis because of how fast the technology evolves. But then wouldn't the same have to be true across the board for any electronic equipment, from laptops to phones to computers to even cars and machinery? Each model car is equipped with the latest and greatest GPUs and software. Typically, depreciation schedule is 5 years. So for Burry to come out and say that the depreciation on GPUs should be, say, 2 to 3 years, now you're talking about modifying tax standards. I don't think NVIDIA is doing anything wrong. This is just a bare case of I am right and you are wrong. But they're doing it by the book and standards. So until they come out with new standards of depreciating these assets, his argument is simply bullshit.
Did I hear correctly that his new I got to reread this because I could be completely off, but like there's like something like 80,000 people paying for his newsletter?
When I looked at it, I got an alert sent to me when it was like 30,000. Somebody sent it to me. And I was like, why would 30,000 people paying this guy $350 a year? It's crazy.
That is crazy to me if that's true. Or is that just like, free people who are signing up?
No,
I don't know.
listen, but when you think about it, $300 for over a year, if this guy's actually going to put out information, is not a crazy amount to pay for information. If that's the type of stuff you want to follow.
No, I'm surprised. I'm not surprised that there's 80,000 people paying these high rates, for information. I think information is very valuable. However, it's just Michael Burry. Like, this is not Warren Buffett's newsletter. This isn't like Stanley Druckenmiller doing a newsletter. It's just a guy that hasn't even managed a couple $100 million.
Well, that's not true.
What's his AUM?
I mean, when he was in 2008, wasn't his hedge fund pretty damn big that he was?
Okay, well, I'm sure it. Yeah, but
let's say
I think just before you shut it down, it was like 130 million or something.
Right now, you would be correct. But the way you said it was a more in totality, where back in the day, he was running more money. Now,
I apologize to Michael Burry. All I'm saying, he got one thing right, and then got book deals and movie deals and writing articles, and it's like a press release on one great move.
So look, he is a very smart guy, and he's one of the only people that called the housing market bubble. So we got to give him a ton of credit for that, like a ton. He did something that everybody looked past. But at the same time, does that mean that right now he is correct? I don't think so. I'm taking the other side of it. I just don't like the argument he's presenting, especially with circular financing. 600 million in 2008, okay, and then it expanded to probably billions and billions as the assets he purchased increased in value.
Well, I don't know. I bet this is where it topped out at.
I don't know. I mean,
how do you go from billions and billions to managing 100 million? Like all your clients have just made a fortune. Now they're all leaving.
Well, redemptions, they showed that he probably opened up a new fund.
Yeah, but why are they redeeming so much if they're making a fortune?
Well, at the end of the movie, and I don't know Burry, but at the end of the movie, they closed down the fund and give everybody the profits, and Burry ended up like 1 point something billion.
Yeah, something like that. There was something about him just investing in all water assets after that, which they made it out to be this big thing. Like, water was going to be this scarce resource during that. Like even that.
I mean, and look, it is a good thing that because short sellers keep the market honest to a degree, right? So you don't want to say that short selling shouldn't be allowed because you should be, if you want to call bullshit on something, you should be able to take a position, being able to call bullshit. So I think it's healthy for the market to have that. I just don't think that this is something to call bullshit on.
I'm not calling for I'm not like anti-bear. Well, you know what? I would never bet against something. If I'm a skeptical of something, I'll stay far away from it, but I'm never betting against it. I just find like there's just too much room to be wrong.
And also, I think it's bad karma. It's like going to the craps table and playing don't pass. I mean, you just don't do that. You don't go dark side.
I'm not anti short, like, you know, there's been a lot of actual frauds that have been found.
Agreed. And I think that short selling and being able to bet against things is important. I just happen to think he's incorrect on this. And I think he wants it to be right so hard. And I think just the news about the TPUs came out at such a perfect time that it got everybody saying, oh, look, he may be right. Or look. But no, that's not correct.
Good time to launch a newsletter.
Look, a great time to launch the newsletter. But think about it. Alphabet's had TPUs for 7 freaking years, if not longer. The numbers that I heard was 7. Then I heard another credible person say 10. Mm-hmm. But I think it's 7, or maybe it's 7 generations of TPUs over 10 years. They've had TPUs for at least 7 years. Okay. Now, it was very important for them because they were able to combine it with their cloud offerings to customers, and it gave them an advantage over other companies. And it allowed them to train certain things in a way that helped them offset their, let me say it differently. It allowed them to build a TPU in a way that allowed them to run proprietary stuff in their cloud more efficiently because they were able to target very certain things in that manner where they still use the NVIDIA horsepower to train it and get it there. They're still going to need a massive amount of NVIDIA GPUs because nothing, as you know, is going to stay stagnant. Moore's Law is dead, completely dead. And the next version of NVIDIA Rubin chips are going to be so much better than Blackwell. Everybody's going to have to upgrade to them. And Alphabet's not going to be able to just train their model on their TPUs when everyone else is training on Rubin. So they're going to have a mix of both, which I think is healthy because no vendor or no company is going to be able to get the amount of chips that they need from NVIDIA in totality. So I think it's good that Alphabet owns the TPUs and can build them, but they're still going to have to buy from NVIDIA.
Yeah.
So I think it's a nothing burger, and I think there's nothing to worry about. It's funny because NVIDIA reported a week before and straight up told everybody on the earnings call, and this is where I get angry because it's like people are putting a bunch of money in these companies, and think about it. If you don't have a lot of money and you're putting 10 grand into NVIDIA, that's a lot of money for a lot of people. And the fact that you're going to put money into a company, I don't care if it's 1 share, 100 shares, 1,000 shares, 10,000 shares. You're going to buy at least 1 share. Listen to the earnings call. Jensen straight up said, we're sold out on cloud GPUs. We're sold out for next quarter. They freaking just put up $57 billion. They slaughtered earnings and they got it for $65 billion, telling us that they're sold out.
Yeah.
So that number's not changing, plus or minus 2%. So we know they're coming in with at least $63.5 billion to $67 billion. Like, we know that. So it's crazy.
Yeah. Next quarter is essentially going to be $65 billion in revenue.
At a 50% plus profit margin.
Yeah. I actually think they're expecting it to increase quarter over quarter to 56%. That includes the $500 million expense that they're expecting next quarter and the increased tax rate to 17%. And they're still expecting about a 56%, profit margin, net income margin, because they also told us what they're expecting for operating expenses.
Did I show you the actual metrics between them and Broadcom? Their margins?
Yeah, I mean, we can take a look at that.
No, I'm asking if I showed it to you.
Yeah, no, I've seen the differences for sure.
Okay.
Yeah, it's actually insane how much money NVIDIA is making right now. Like,
It's absolutely insane. So I have it for NVIDIA, Broadcom, and AMD based on the last quarters. And look, at some point, this may change. Keep that in mind. At some point, this may change. Let me move it over a little bit because you have the chat overview there. But
I can also pull it down for a second.
no, you don't have to. I moved it. It's fine.
Okay.
Operating margin, and this is on the trailing 12. Okay, this is the past 12 months. This is not just Q3 earnings. Look at the freaking operating margin compared to Broadcom and AMD.
Yeah. Can you make it a little bit bigger? I can either drop chat or just.
Nope.
There you go. Look at that. Look at the lineup on that one.
And look at net income. Okay. Look, Broadcom's an incredible company. Incredible company. But let's not forget, you can be an incredible company, but you're not holding a candle to NVIDIA's net income. I mean, there's a big difference from 19 billion to 100 billion. Big difference.
Yeah. And growing at the top line rate that they are, right?
Right. And when you look at the net income margin, you got 22% more on the net income margin with 5 times more net income being generated and more top line growth. So am I really worried about NVIDIA? No.
You got to throw a gross margin on this too.
Right. Why do we care about gross?
I like it.
Okay. You know what? For you, I'll add it. I'll update it.
We don't have to do it live, but
I'm not going to do it. No, I'm not going to waste everybody's time and do it live. NVIDIA's gross margin is like 78% or something like that. 79%.
Yeah.
But to me, gross doesn't necessarily matter as much. So I don't put it on there because I don't make decisions based off of gross because I want to see what the reason I like operating in net instead of gross in net is because gross doesn't take into consideration how much money they're actually spending to operate the business.
No, I know. I just like seeing it.
All
of them. You know? I don't function off any individual rate because obviously, you know, the more you flow down, the more to the real number you're actually going to get. But you know, I do like to see what their cost of goods sold are, like seeing if you can compare it, especially whenever you're in the same industry. It's like same thing with price to sales. It doesn't matter until you're looking at the companies that are trading in the exact same industry. Like direct competitors, price to sales matters. Outside of that, to compare a SoFi to an NVIDIA on price to sales is like literally a pointless. It means absolutely nothing.
Yeah. So I'm not worried about NVIDIA. I think NVIDIA is a great company. And I think they're going to be significantly higher next year than they are today. Maybe the headlines took the air out of this run for NVIDIA. Maybe they don't hit 200 by end of year. Maybe they do. I couldn't tell you. I'm very shocked they sold off in that quarter, which is the best quarter I've ever seen from any company ever. And I follow probably more companies than most people that actually make content, not just on YouTube, but on any platform. Considering I've written about over 500 different ETFs and individual companies. So, I mean, like I follow everything from business development corporations to MLPs to tech. So I've never seen a quarter like this.
Yeah.
Ever.
Yeah.
And for it just to be disregarded the way that it was is crazy. So maybe it trades sideways for a while. But what happens if they come out with Q4 and blow Q4 out of the water? As you know, Jensen is sitting there and he's like, you know what? If I miss on Q4, we're going to 150 or 140. He knows that's going to happen. How do you come in and miss after guiding for 65? I don't think he's going to.
Dude, I think they're going to double beat or triple beat once again. It'll be so exciting to see. Obviously, we do know, the $500 billion runway, which, by the way, they even said in the $500 billion runway comments from Jensen, they said the Humane XAI deal, the Anthropic deal, these were just completely additive to the $500 billion. The $500 billion that they were talking about were projects that they thought that they had, full insight into. Like they saw the how am I to say this? Like, those were customers they knew they were going to see revenue from, not new deals that they end up signing. And those are huge deals. That's a 500 megawatt data center with Humane. That's a $30 billion potential chip deal with Anthropic. It's huge. I don't know, man. I think people are just disregarding how big this is because they just think that one day it's all going to come crashing down. But, a couple more quarters of this level of growth at this multiple, you're going to be at such cheap levels where I almost think like you'll have to buy them because if you don't, the value investors are going to start getting involved. Like, the multiples shrink very fast when you're growing at 60%.
NVIDIA is a value company right now.
Yeah, no, well, comparatively to the,
No.
it's hard to call it a value company because they don't really like looking at forward metrics all that much.
Well, let's take a look.
To call it value, you kind of have to look at trailing valuations, not forward valuations. You're going to bring up Costco and
No, I'm not going to bring up Costco. You don't know what I'm going to bring up. Promise you I'm not bringing up Costco. It is a value company. It's absolutely a value company. I'm going to prove it to you.
All right.
All right. So I want to share two things. Let's share this first. Okay. What is this, Tanner? Read that.
State Street Spider Portfolio S&P 500 Value ETF.
Yes,
Value
sir.
ETF.
Yes, sir. So this is probably one of the largest value ETFs because this is the Spider Value ETF. So when you think about sector specific, the spiders are what the de facto ETFs are. Would you agree with that?
Yes.
Okay. Read for me the largest segment of the value portfolio, please.
Technology at 26.6%, I think I'm reading.
And what are the top three companies, sir?
The Apple, Microsoft, and Amazon.
Okay. And what's the 10th largest company, sir?
AMD.
Okay.
I don't see NVIDIA, brother.
Okay. Nope. But here we go. You ready?
Okay.
So those are the value companies, right? Now let's actually show everybody what the valuation is. Oh, Apple, right here, 2025. So you said trailing. I got trailing up, okay?
Yeah.
This is trailing right here. 2025, Apple 37 times. NVIDIA is just over it at 38.5 times. You look at
the cutoff is 37 times, actually.
If I put AMD in here, this is going to look really ridiculous, okay? That NVIDIA is not in that top 10. But regardless, then you look at forward, NVIDIA is trading at under 20 times.
Yeah.
So NVIDIA is basically trading like a value company. Microsoft is 30 times, Amazon's 32 times, and Apple's 37 times. If I put an AMD in here, do I have AMD anywhere? No, I don't. This is going to look like a value company. So when I look at this on a forward basis, it is so undervalued. And the fact that the 2027, and look, for everybody who wants to try to nitpick, yeah, I get it that that's really 2028 fiscal year, but their fiscal year ends in January. So the 2028 fiscal year is really 11 months of 2027. So their 2028 fiscal year is really 2027 numbers. This got taken up.
Tesla's 2027 forward P is 130.
Yeah, it's crazy. It's crazy. But this 2027 number got taken up from $8.09 to $8.64 to $9.19 or something like that to $9.51 in a matter of 3 days.
Yeah.
So I see a lot of value here. It's trading like a value company. If it goes, I mean, think about this. Let's just say this retrace without the numbers changing on forward EPS. Let's say this retraces to 160. You ready for how the numbers change? A little freaking crazy. That's freaking under 17 times forward. And if it gets down to 150, that's almost tobacco company levels on a forward basis. because Philip Morris trades at a higher forward multiple.
Yeah, I think the interesting part about NVIDIA is, and we've seen this in previous cycles, is everyone's just worried because the revenue looks like it continues to climb until it doesn't. Like
Right.
it's only recurring in nature if they remain the top slot, you know? That's the only concern that everyone has. Like Apple, people will continue to buy iPhones, people will continue to use the App Store, these sort of things. Google, obviously, Amazon, these are such recurring businesses, Meta, recurring business. But NVIDIA, everyone has in the back of their mind that someone's going to come out of the woodwork and just create a new way to generate tokens. That is not in Jensen's favor. Maybe that's, it's not going to be quantum, but, there's always these talks of something else is going to appear and just blow it away technologically. I just think it's just crazy. I mean, GPUs have been the top slot for 30 years now, literally 30 years. I just think it's wacky whenever we don't see any capacity constraints at all. Like there's no customer saying, hey, you know what, we're good, or we're slowing down, or we're fine. It's all completely over capacity. Nebius is expecting 700% growth in full year 2026. So growing 700% on top of a year that they grew 700%, the level of growth that is expected going forward, and then the disrespect that you're seeing by giving it essentially a lower multiple than Apple on a trailing basis is like, guys, what are we talking about here?
It's pretty wild.
It's wild. It's wild to me.
I'm with you.
I don't know. Anyway,
I'm with you. And you know who the biggest winners out of this are?
Who?
There's two of them. Broadcom and Meta.
From the TPU story.
Yeah. Biggest freaking winners are Broadcom and Meta.
Yeah, I feel that for sure. That's the amazing thing, once again, to own a lot of the data center and cloud names, is that like if there is a new solution that's created that might tackle NVIDIA chips, well, these data centers are agnostic. They don't have to go and purchase from Jensen. So they will stay on top of the game as long as people believe that the artificial intelligence movement continues to head in the right direction, which is also quite exciting to buy the Googles and the Amazons and, Microsofts, for example.
The funny thing is that Broadcom's CEO is on Meta's board. So how long have they been actually talking about this? He's got Zuck's number. Call him at any time, talk to him about this. And this may be exactly what Meta needs to get back to 750, 800, because all Zuck has to do think about this. Q4 earnings come out. We get rid of the narrative about the stupid one-time tax charge. Everybody sees EPS slaughter. They generate more than $8 or whatever they're going to do on EPS. And then Zuck comes out on the earnings call and says, listen, because we're not a public-facing cloud with enterprise clients for web hosting and cloud computing and all that stuff, we made the decision that we no longer have to expand at the rate that everyone else is with NVIDIA chips, and we can augment some of it with the Alphabet TPUs, because we're going to work with Google and Broadcom to design it exactly how we are. So we'll have the NVIDIA chips for horsepower and these to run very specific workloads. And we're going to be able to go in maintenance mode and spend $70 billion a year for the next 3 years instead of getting to $100 billion. He says something like that, this thing is going to go bananas, because it'll signal they're no longer going to be on a crazy expansion mode, and it will pad the worries about how much Reality Labs is losing, and it'll make it look like this guy is no longer going to spend like a drunken sailor. Maybe he can even get to a point where he's only spending $50 billion a year on CapEx, with having cash from operations expand, and that'll make free cash flow go crazy.
I honestly think the other possibility is just that they are trying to grow faster than what NVIDIA can even handle. NVIDIA is trying to keep all of their customers happy, and so they're going to Meta continues to go back to Jensen and say, "Hey, we'll buy everything that you have. We'll buy everything that you have." And they're saying, "Hey, we're fully sold out of cloud GPUs, fully sold out." Okay, well, we need to find another distributor because we want to grow faster than what is out there right now. We need to get ahead of our competitors. So people are almost taking the second choice or the third choice option because, like, all the good pizza's gone at the pizza party. So now they're going through the vegetarian pizzas. Like, everything's getting eaten, you know? The meat lovers is gone. Pick your favorites, whatever. But I think that could be a very real possibility as well.
Yeah, I mean, I am super bullish on Meta here. I actually think Meta is the most interesting Spectacular Six company right now. And I am going to continue calling this a Spectacular Six because I no longer want Tesla part of what I talk about with the Mag 7 because they're just not in it. Like, you can't look at Tesla's numbers and put them up against any of these companies anymore. Now, in the Spectacular Six, I think Meta is so interesting. They should have an unbelievable 2026, and Q4 should be unbelievable for them. And at the rate that they're expanding, the profitability they're generating, and where they're trading, there's no reason that they can't get back to a 24 or 25 times forward earnings, or even a little bit of a bigger multiple. And I think that this is something that can do very well. And I think if Zuck can get this back to 750, 800, I think he considers splitting the shares. And while that does not have an impact on valuation or market cap, it has an impact on volume and perception, which is more important, and it makes it more affordable. You'll see more capital come into it because for some reason, people feel better spending $50 or $100 a share rather than $500 or freaking $700 a share, when it makes no difference because you shouldn't look at it on how many points it's going up. You should look at it as percentage going up. And it doesn't matter.
The only difference is the covered calls and the cash secure puts that you're going to.
Not really, because you'll just be able to write more contracts. It'll even out.
No, I know, but for the small retail investors that can't potentially afford 100 shares of.
Oh, right. No, it'll actually be bullish for the option market because you'll have way more liquidity in it.
Yeah. More participants as well, right? But
super bullish for them.
Did you see the NVIDIA news today? Probably about 10 hours ago or so.
No, what was it?
A report came out saying that Alibaba and ByteDance are secretly training new AI models in Southeast Asia data centers to keep access to NVIDIA chips after the United States banned H20 sales to China.
I mean, would that even surprise you?
No, but you know what? I think the fact that China does not have access to ASML or this really high level lithography, it's always been a worry for me that they will create their own way to do things. I think China is exceptionally smart. I think that they have done well to manufacture some of the best hardware in the world. And they've done this on solar, on EVs, on batteries, all whenever we thought that we owned those markets. So China left to its own devices, and whenever American innovation is sleeping or whenever, those markets are highly regulated, we usually end up losing those markets to China. So the whole idea that China was so far behind and Trump and the administration had it under control, I never agreed with. I think the ban was a terrible idea, and everyone that was following me on YouTube or X knew that from the day that announcement happened. I was furious. But this sort of shows that the actual tech companies that are in China are not aligning with the administration, with the CCP. They are saying, hey, we actually don't want the ban. we like NVIDIA, and we'll actually go out of country to make sure that we can still get access to these chips, because the silicon in China is not as good as maybe some people are claiming, and that they don't want to use Huawei chips, at least not for 100% of their needs.
Okay.
What do you think?
Not
Let me finish off this report here.
Okay.
They're releasing compute from non-Chinese operators in places like Singapore and Malaysia, which lets them stay within export rules while still using top-tier chips. DeepSeek is the outlier, having stockpiled NVIDIA chips to train at home, and is now working with Huawei and other local players on the next wave of Chinese AI chips. Thoughts?
Doesn't really impact me.
It definitely does.
Because I don't know, it's not something you can handicap for, because you don't know if it's true. You don't know if it's not true. You don't know how everybody's going to react to it. I mean, it's just whatever. Noise at the moment. Let's see if we start hearing, like, first off, where did this report come from?
Financial Times.
All right, so it's a credible source.
Yeah.
Let's see what the political officials start saying about it. I'm not too worried about it at the moment.
We will see.
We will see. Well,
any other topics? You buying BMNR down here?
You want to do? We'll save SoFi for tomorrow, I guess.
Sure.
Are you looking at anything new by any chance?
I'm buying Meta.
I know, you told me. I'm so proud of you.
I was so surprised. Like, whenever you had this shocked face, whenever we were talking with Chris, I was like, I've told you for the past couple of weeks since it's dropped. Like, I bought it on the day of earnings. Like, whenever it crashed, I started to buy it like 683. That's what I was trying to say. Saying it backwards.
Listen, I'm very proud of you. I think Meta is a great buy on the drop. I think we should talk about BMNR.
Yeah, yeah. I wonder where you got that idea. All right, let's talk BMNR.
I think we should talk BMNR.
All right.
Where
are you buying it?
Yeah, I mean,
dude, I asked you if you were buying any BMNR. You didn't want to talk about it. You switched it.
When did you ask? I didn't even hear you ask. When did you ask? Today? Like right now?
Like legitimately, just then, before you asked me if I was getting anything new, I asked you if you were buying BMNR.
Oh, I'm sorry. I actually did not hear that. Yes, I am. I bought more at 25.40, I think, and I'm considering buying more this week. And any price under 40 helps me dollar cost average, so I'm an active buyer. And it's all when capital gets freed up, and there's capital getting freed up right now, so I'll probably be buying more this week. I'm sorry, next week, not this week. Maybe I'll buy some tomorrow. Market's open tomorrow. Maybe I'll buy some. But yeah, I'm bullish on BMNR.
Half day, right?
Half day tomorrow, I believe.
When does that close? Is it noon or 1?
I think it's 1. Yeah. I could be wrong. It's either noon or 1.
I think it's 1. That's what usually, if I remember correctly. It's not like we get half days very often, but if I remember correctly, it's usually 1.
Yeah. So I actually wrote an article about BMNR on Monday, and when I wrote the article, it was trading under MNAV, which was very interesting to me. So getting it at a 5% discount on MNAV, I really like that.
It's no longer under MNAV, by the way.
Well, I got it under MNAV when I purchased. And this is something where I think Ethereum is going to start going up again. My investment thesis on Ethereum has not changed. And I think the next couple of quarters are going to be very interesting, because I think we're going to see good stablecoin adoption. Now, what I will say is I have no idea when these things are going to go down and when they're going to go up. Ethereum is incredibly volatile. And if you go back on a 5-year basis, we have seen retracements just like this, if not steeper. So Ethereum could go down to 2,000 or less. And if it does, BMNR is going to follow. But at the same time, for me, I'm looking at this on a several year outlook. And I think the prices I paid today, my future self will be happy with. And 2026, we're going to see the ramifications of staking. We got some news from staking from the earnings. And I think there's going to be a lot of things that are accredited to earnings that we're going to be very happy with.
This is where we're at right now, assuming that the share count hasn't changed, which has probably gone up very, very slightly. But yeah, not inclusive of Bitcoin and their moonshot projects, which would only change this by very small amounts. But
you have to have that in there. Is that part of the bottom one or not? Because Bitcoin, they have 192 Bitcoin.
Yeah, it's not in there, so you can adjust it.
All right, so it's probably like it's probably a 10% premium then.
It's not even remote, dude. That's 192 Bitcoins, like what is that, 10 mil or something?
I have no idea. What is it?
All
right, so leave it. It's fine.
Yeah, like it really doesn't change much. If we're at 90K right now, 17 mil. It doesn't even change the numbers,
Are you excited about BMNR right now?
I like it. I definitely liked it under 1x MNAV, but that just simply adjusts with the market. It's just so crazy right now. Like you see ETH go down by 2%, it drops by 10. ETH goes up by 3%, it raises up by 20%. Like it's just, it's insane, the volatility on top of Ethereum. It moves even more than ETH, and crypto in general moves a lot. So unlike many people, I'm not panicking based on the price change. Like I liked it at 50 and expected it to go to 100, and I'm even at this price, I still expect it to go to 100. Nothing's changed on the ETH story. BMNR,
you expect BMNR to go to 100?
Well, I don't have a time frame for it, but
I'm not saying you do. I'm just saying you expect it to go 100.
I expect it to be in the hundreds.
I like that.
Oh, I do think ETH is going to, be above $10,000 per share. Like,
same here.
What's the percentage of real world assets and the way that we trade is on blockchain? I mean, it's still non-existent. The way that we make payments, Visa, MasterCard, there's tens and tens of trillions of dollars that pass through these networks. None of it, very small amounts of it is on blockchain right now. Like we're so nascent.
The Bitcoin maximalists are going to hate what I say. They always hate what I say. Bitcoin has no freaking utility. It just doesn't.
Right now, SoFi members can send money to their Mexican friends and family through the Bitcoin network for free, instantaneously.
Once again,
not for free. Sorry, it's like a extremely small fee.
Bitcoin's settlement time is what? 30 minutes?
10 minutes. But
I think you're wrong on that. Because that's through a separate layer, though, right? That's
no. You go ahead and you click clack, search it. I feel confident on this. The Bitcoin clock is a 10-minute ticker. But I could be wrong.
It was longer. All right, normal conditions, transactions, 10 to 30 minutes. Okay.
That you're making us both right here?
No, that's why I just Googled it, and they're saying 10 to 30 minutes for normal conditions. High network congestion can take several hours or longer. Low traffic can be within minutes.
And then that said, though, it's on the Lightning Network, which that is extremely fast.
Yeah, so I think that Ethereum has way more utility than Bitcoin. And if we're thinking about something that is going to be used for the financial network and for tokenization and for smart contracts with escrow and all the other things, stable coins, Bitcoin's not the platform that the majority of people are going to use or companies are going to use. It's going to be Ethereum. And if that's true, and Ethereum has built in a 1.51% issuance, and we're able to burn off more than that, it becomes a deflationary asset. And I think Ethereum's value becomes way more than Bitcoin.
I think Star Buccaneers here is 100% correct. You know, even whenever the dollar went off the gold standard, it didn't make gold a
I'm not
non-valuable asset.
counting out Bitcoin. I'm just saying that from a utility aspect, there's way more utility with Ethereum than Bitcoin. That does not mean Bitcoin's going to zero. It doesn't mean that Bitcoin's going to fall. In fact, Bitcoin will probably continue to go up.
I even think a lot of the Bitcoin, maybe not the maxis, but a lot of the people who hold Bitcoin look at it as a store of value, and ETH and some of these other chains as more utility coins.
Yeah,
I think that is a normal belief.
And you can even say there's more utility with silver than gold. You can say that because manufacturing and other things. Now, silver has never been more expensive than gold, and that could continue to be the case with Bitcoin and Ethereum. But at the same time, if Bitcoin is where it is and has the market cap of what it is, it's not crazy to think that Ethereum can start to close the gap if tokenization, stable coins really start to take off. So I think there's a lot of upside for Ethereum.
Rob makes a good point here, and I've been thinking about this. Are you not shocked by the ratio that Bitcoin and Ethereum, it's just stuck at the same point? If Bitcoin goes up, ETH goes up. And these sort of 4-year cycles I have not believed in for Ethereum, especially as it gets picked up by Wall Street. I think that will go away. But for the moment, still for in the meantime, it is holding true that these 4-year cycles are happening, that we're going into these crypto winters, and that Bitcoin and Ethereum trade in a very, very close range, like in sort of this 0.03 ratio. It's so weird.
It's not something that I really paid attention to, so I'd have to look into it.
You can, I really do think you should follow it because I do think it's quite interesting.
I don't know if I have time to follow that, to be honest with you. I'm gonna have to give something up.
It's nice and easy.
Is there a tracker? Can you make a tracker for it?
Oh yeah. You can go to anything. Just type in Bitcoin. It's almost like ETH to USD.
Oh, okay. So if there's a tracker, it's something I can put on my list to continuously.
Oh yeah, and there's 1,000 websites that'll do this.
But I do the same thing for silver versus gold.
Just the way that you would look at ETH compared to USD or ETH compared to the euro, you're looking at ETH compared to Bitcoin. And if you track this ratio, if we go back, 1 year, even 5 years, well, even this doesn't even look that great, but it's sort of been in this average. I think the average right now is 0.04, but it has sort of stayed in this range, and it's like, oh my gosh, like it's just crazy. It has not gotten here in a long time. But 0.08 right now, if we were to get back to this level, would skyrocket Ethereum. That would be like, almost 10,000 ETH at that point, or if it actually would be 10,000 ETH. But yeah, that ratio is very weird.
10,000 ETH wouldn't suck.
No.
You see Tom Lee's prediction for the rest of 2025?
Well, I thought I did. It was weird. He said 7 or was it 7,000, but end of January?
No, I saw on X 7,000 to 7,350. I think he gave a range.
Someone double check in chat, but I think he said for the end of January.
Oh, was it? Maybe I looked at it quickly.
But talk about pushing the goalpost.
I thought it was on his X channel, actually. Hold on.
Yeah, if he uploaded a video, we can watch that.
Tom Lee. Hold on. All right, fun strat. Our base case remains a S&P 500 year-end rally to 7,000 to 7,350. 10 hours ago.
Sorry, I thought you were talking about his ETH prediction.
No. I said S&P.
Sorry, my bad.
No, S&P 7. He still thinks 7,000, but he thinks it could be as high as 7,350 for S&P.
Got you. But what does he think ETH is going to be? Because I'm pretty sure he just talked about this on CNBC.
He did. No, he did. And if you want to find the video and watch it, we can watch it.
I have the one from the 26th 3-minute clip here.
Yeah, so let's watch it.
Okay. But however, it says it's talking about Bitcoin, but I'm sure he touches on ETH in this video.
Now, you've been, I think, pointing toward, let's say, 7,000 in the S&P by year end. Now, that's only like 2.5% up from here. We made some progress. But a year ago, you also thought we'd hit 7,000 in the first half of this year. So what happened along the way? And I guess, what might you think about in terms of impediments looking into 2026?
Yes, I mean, we're almost through this year. And I'd say, looking back, this was 5 years of history compressed into 1 year, because we had a major bear market, the biggest tariff hikes ever. And that, of course, killed any hope of any 7,000 in the first half. But miraculously, stocks went into a waterfall decline and recovered every single point of that decline symmetrically. So it really speaks to the resilience. But I guess as we're thinking about next year, I bet you it's going to be very similar in the sense that we'll get a policy shock, maybe whether it's monetary or from the administration. It could lead to a big drawdown of 20% again.
Yeah.
But it's a replay of this year. And maybe we've now had 20% bear markets in 5 years. I mean, that's a lot of history compressed into a 5-year period.
Now, you mentioned obviously the confusion over the path for the Fed as contributing to this recent pullback, as well as some policy flux in there. What role did the violent shakeout in crypto have on all that? Because a week ago, that's all we were talking about was Bitcoin can't stop going down. The NASDAQ wants to follow it, or people are concerned about how that's going to knock other things loose in other financial assets. So it's stabilized, but it's not exactly sort of participating to the upside in this bounce.
Yes. So crypto had been a leading indicator for actually most of the last 5 years. But on October 10th, crypto had what I would call Armageddon, a flash event, but it led to a liquidation that was never seen in the 15 years history of Bitcoin. About a third of the market makers went out of business that day. Almost 2 million accounts went to zero.
Yeah.
And it was because of a pricing error, what I would call a glitch. It led to what they call auto
you've
deleveraging.
definitely made that case that it definitely seems as if there was something in the kind of market maker functioning that got fouled. Now, that being said, the reason you can have all those accounts auto-liquidated is because there were that many accounts with that much leverage that got Bitcoin up to where it was, above 120.
Yes.
Right? I mean, so it's not as if it happened in a vacuum.
Yeah. So in a way, it means crypto represents really a very precise measurement of risk appetite, because there's so much more leverage. And that got wiped out.
Right.
That last time it happened in 2022, it took 8 weeks before people sort of touch their toes back in. I think that's where we are. We're near a bottom. But now I don't think crypto leads. Crypto is lagging because it's really the AI that's going to be leading.
Okay, so so basically that is kind of sidelined the idea of what, Bitcoin 150,000 you were thinking before?
Well, I think it's still very likely that Bitcoin's going to be above 100,000 before year end, and maybe even above one to a new high. So Bitcoin makes its moves in 10 days and every year. I think some of those best days are still going to happen before year end.
I mean, what are your thoughts on that? The best years are still to come?
Oh, without a question, the best years are still to come. But I mean...
Sorry, the best days of the year are still to come.
Depends on the Fed. Truly depends on the Fed. If we don't get a rate cut, I think that the market is going to get scared. And I think you're going to start to see the rhetoric, and it may not be rhetoric, because I actually think it could be true, that the fact that we're up 1% on unemployment, we could be getting pushed into a recession, and a rate cut is even more important now, because we need to make rates more accessible for companies to refinance at a lower rate and for businesses to borrow to expand. And if we don't get a rate cut, I think it's going to be not good for the end of year rally that everybody's hoping occurs.
All right. Is there any other things that you want to touch on this stream?
No, I think if you want to call it, we can call it. Up to you.
Maybe the last thing, I just saw a comment on Google, and I'd like to hear what your thoughts are on Google at these prices. It's much different than talking about this stock at, 150, 160. It is, there's been a lot of appreciation.
When did you get bullish on Alphabet?
140-ish.
Okay, so you started buying then.
Yeah, at the low end, yeah. I think my average is in the 180s, like 182.
Okay, so when you asked me that question, bring this up real quick.
Yep.
So I'm not somebody that just got on the Alphabet bandwagon. I was bullish on it in February, and then I was bullish on it in April at the lows. I stayed bullish, like very bullish on this. I thought it was ridiculous. I even was very bullish in July when it started running again. Okay. This is where I'm at. I don't think you're going to see Alphabet up 100% over the next year. Now, still a great company, can still do very well, but I think there's other names I'd be more interested in based on how much Alphabet has run. And that may not be the best way to look at things because I still think from a valuation standpoint, it still makes sense. But over the next couple of years, I am planning on allocating more toward Amazon than Alphabet over the next couple of years. I think they're both going to do well. I think that the market's going to do well. And I think Alphabet, like, it's probably still undervalued, but it's a lot more fair value now than being the deep discount that it was that didn't make sense 6 months ago.
Yeah, no, I think that's fair. I'm not selling a single share. I'm not looking to trim, but I'm not acquiring here either. And I think that there's better names in the Mag 7 right now for me, like Meta. It's growing faster, it's cheaper, and there's still a ton of upside. So,
yeah, listen, I'm with you. I think there's a lot of upside. It's just for me, I think that we're in a situation where I prefer allocating capital to other plays. Look, I think NVIDIA is interesting. I think freaking Meta.
Dude, I would buy NVIDIA in a heartbeat if it wasn't over 40% of my portfolio.
Yes, you are in a situation where adding here may not be a you're going to be very pigeonholed again. So
yeah.
I get it. I completely understand that.
Okay.
So,
ladies and gentlemen, that is a nice little nighttime stream after a little turkey dinner. Hopefully everyone had spent some great time with family and friends. It's all, it's extremely important to do that after watching some pretty brutal markets over the last couple weeks, and it can be quite tiring. You have to remember why you're doing that. It's, potentially to support loved ones and these sort of things. So happy that everyone got to take this quick break and, get back at it tomorrow. So tomorrow, probably the regular streams from me and Steve on our own YouTube channels. But then tomorrow at around 10 p.m., we have the FinTech Friday show. I do have a lot of names that are all very simple.
FinTech Frenzy, FinTech Friday, Friday night with the crew, whatever you want to call it, we'll be there.
Yeah. But we'll be talking about SoFi, Robinhood. I'm sure we'll be talking about the Mag 7 names as well. Even though we called it the FinTech things, I honestly think it's just going to be a broad market talk with us and the boys. So if you're not already, make sure you guys hit the subscribe button, regardless of whose channel you are not following already. But Steve, any last words?
No. Maybe if you're doing your stream, I'm actually off tomorrow. So
Sweet.
If you want me to stop by for like 20 minutes or so, happy to. And then I'll probably do something tomorrow early evening after Amit's done before our 10 o'clock. And then Saturday, 9:30, we'll be here. I don't know who's going to be joining, but I'm going to throw the bat signal out. We'll see who's going to come. There's
Cool.
a bunch of things to discuss. And yeah, tomorrow night, I'm interested to see what Tevez and Roy think about me starting to change my tune on Hood.
Yeah. That sounds good. Ladies and gentlemen, bye for now.
Have a good night, everyone. Eat some pie.